your guides to a really great financial future. Tom and Don are talking real money.
It is, once again, the Talking Real Money audio podcast, video podcast. It's that time of week when we do both. Why we do both, we're not really sure. But it's become a habit now, so we just keep doing it.
I did have somebody in the office the other day who apologized. I listened to your podcast, but I've never watched it. I said, that's actually okay. You haven't missed that much, but
no, because we really don't do anything.
No, we don't really have
we don't do anything. We don't have a lot of video things going in the background,
pictures and,
nothing. I could do just hand puppets. Well done.
You need to have light on those to make it work. Anyway, that's a whole other thing.
Well, what? You don't buy this? Come on,
you are
Tommy.
a Disney guy. We can see how you might be an Imagineer, but let's let it go.
Okay, I'm Don McDonald in my Florida puppet studio. No, my Virginia puppet studio. I don't even know where the heck I am these days.
On the road again.
I don't even know where I am. I'm getting so confused.
That's sad.
I always know where Tom is until he's not there, which is, he's sometimes in Mexico, sometimes at Chelan.
That's true.
Once in a while in Phoenix, escaping the heat, the cold. And Tom is Tom. That's Tom Cock. He's in the Seattle area somewhere.
Yeah. Mm-hmm.
He's not, however, in China, which is for the best because he'd probably be in a prison somewhere for just acting out.
Come on. Because I'm such a dissident, as it were.
Yeah.
Yeah, that's me.
It's just the white hair. They're going to go, okay. White hair. Oh, no, not allowed. We don't talk about international investing a lot. We believe in doing it. We believe it is important to be invested internationally. And we do believe that you should have part of that international investment in emerging markets. But one of the most controversial and confusing emerging markets is one of the biggest economies in the world, which makes it sound oxymoronic. But China kind of confuses people and messes up this whole concept of emerging market investing for a lot of minds.
By the way, I think I have this right, that it may become the world's largest economy within a year or two. It's pretty big and getting bigger.
It's huge.
It's not even close to being among the world's largest stock markets in terms of capitalization of the companies there. Why are we talking about international investing? Well, because last week the headlines were screaming about China cracking down on companies in their country. They have this weird, you got this Chinese communist government, right? And then you got this capitalist system, and they try to exist together, and you throw other city-states in there. It just makes it very confusing.
Yeah, in reality, it's capitalism and communism they're like oil and water.
Yeah.
And the reality is it's really not communism anymore.
Well,
it's more like autocracy and capitalism blended together. That's all the political commentary I'm going to make.
Yeah, and I think that's smart. But here's the thing. Here's what happened. So last week, they cracked down on a number of those firms. The Chinese stock market took a big hit. It was down, I forget the percent. But then because they're part of the emerging markets index, Brazil, Russia, India, China, etc., emerging markets went down about 5% last week. So then people ask me, should I own emerging markets? And I look at the numbers. I mean, wait till I give you, you're going to be surprised.
I'm dying to be surprised. I'm rarely surprised anymore.
Well, you will be here.
Okay.
Last 10 years, emerging markets value stocks. The annualized return, 10 years, 1.8% a year.
Ew.
10 years. Versus U.S. large growth companies.
Yeah.
17.8%. So somebody said, wait a minute, why am I owning
Well, yeah.
emerging
Why am I
markets?
buying the stuff that's going down?
Maybe it's gone down. Thank you for the setup. I appreciate it. But okay. So by the way, let's just unpack that a bit. Number one, you made the very good point. Would you prefer to buy things that have gone up, or would you prefer to buy things that have gone up less? I'm always
Mhm.
going to go up with the less,
Yeah.
because what's the likelihood in the future that, things kind of swing one way, they swing another. By the way, if you look at the 10 years prior to the last 10 years, emerging markets did better than US markets. So
This
crummy
is one of the
performance.
problems,
Yeah,
though,
it
that
is recency
investors
bias.
have
Yep. Hmm.
is we have a hard time looking back decades, because what you have to do is you have to really, all the numbers that we have, all of the studies that show that small cap outperforms large, that value outperforms growth, that emerging markets have a place in your portfolio. All of those studies are based on 20 and 30 and 40 and 50-year returns, not 5 or 10.
Exactly. Yeah. So, okay. But again, why would I still be invested in them, or why would I buy them? For the exact reason that they've had a crummy, less robust performance. The US market has been out of control for 10 years, folks. Be honest with yourself. Don't expect 17.8 for the next 10 years. Well, if we do, that'd be great, but I wouldn't expect it. Number two, we do know, and you made a very good point, Don. If you look back 50 years, it's a better approach to own the globe, all of it, in the appropriate percentages based on the value of those companies, market capitalization, if you will.
Mm-hmm.
That has meant actually a little better return and lower volatility, less ups and downs, because you're more diversified for a number of reasons, not just the companies, but the countries, also the currencies, right? Because sometimes US dollar does great, the yuan does great, et cetera, et cetera. And then here's my personal take on emerging markets. Would you rather invest in developed countries, United States, Europe, et cetera, or countries that have a future that looks more growth oriented? I'll put it that way, because
Yeah, but it's safer. It's safer for
it's
me to be
safer.
in the
Yeah,
US or
I agree.
Germany or
I agree. Developing countries are riskier because of the politics we mentioned at the beginning, because things could go wrong. Remember, United States was a developing country, at one time, where bonds were defaulted on, and stocks were issued in railroads that didn't exist. All kinds of hijinks were going on because
or
those things
oil
happen.
fields in Panama.
Exactly. Thank you, Leo. Yeah, all of those things can happen. So, but I still think some of your money should be, not all of it and not too much. But in the equity markets, by the way, if you look at it globally, it's about 10% of the value of firms globally are in those emerging markets. So I would continue with that investment. And my hope is that, like the 10 years prior to this last 10 years, you'll get paid for taking that risk over time.
In other words, would you rather buy high or buy low? Which is better? Answer the question. Buying high or buying low? Well, buying low. But if you're focused on just buying US stocks, you are buying high. Could it be higher? Yeah, we don't know. But we do know that emerging markets have not done as well. You're buying low. We also know that that global markets, just the international developing or developed world, has not done as well. You're buying low. I mean, the United States is now at like 57% of the world's market capitalization.
Yep.
And it was for a very long time 50-50.
It was actually under 50 for a time.
You might really, if you want to do this right and not try to predict which market's going to do better, the right allocation, and I know this is uncomfortable for many of you, is probably right at about 50 to 55% US, 35 to 40 developed international markets, and then about 10 emerging markets.
Yeah. It's simply putting the money where the value of companies are. That's it.
And this applies no matter what your age, whether you're a rich old person or a poor young person just getting started.
Young Turks.
If you're a young punk, you don't need as much in bonds, though, probably.
That's very good advice.
If anything.
Yeah.
And if you're young, Call us with your questions. Join the old people at 855-935-TALK.
They need love too, right?
Love. Old people like us, we need love. And send in your questions at talkingrealmoney.com or your comments. And like yesterday's podcast, the very next thing on the list is another comment about our ageism review.
Uh-oh. Yeah.
It's great that that these caused you to take interest. Ageism response is the subject because we called it reverse ageism. I wouldn't take the ageist review too seriously. I am 34 years old and I've been a daily listener for a while now. Obviously, wealth management by nature gravitates to older age groups because they tend to have more money because they've had more life. That's the only reason. They've just had more life. When I was in my 20s, do you know how much money I had sitting in the bank at any given time?
Not a lot.
3 figures, maybe?
Yeah.
Maybe on a good day?
Yeah, I was going to say on weekday, Friday payday. Yeah, right.
Sometimes it was a negative number.
Been there, done that. Yeah.
So it's only that since I've been older and I've been investing and my salary's gone up and things like that I've been able to put some money away.
You're getting a salary for this?
For something. I don't know. Somebody keeps putting money in my bank account. I don't know what it's for. Anyway, he said, I think you do a great job of handling the college questions. I think my generation and younger, this is a very interesting comment. I think my generation and younger have serious issues with jealousy. They have been influenced by social media and think wealth is a dirty subject. And I'm going to add my own parenthetical, yet they still want it. And he kind of added that. My generation is also obsessed with get rich quick concepts, parentheses, crypto.
Oh, please. Yeah.
And love the idea of not really working much.
Yeah, I'm not going to go with that one because I think that's every generation looks at the next one and says, "Oh, they just don't want to."
But no, he's of that generation.
My dad said that about our generation.
He's of that generation.
I know.
I mean, how many times in the past month have you been somewhere where they say, "I can't hire any employees. I can't get help."
A lot.
Yeah.
Yes, that's
anyway,
true.
Let's keep going. A part of me understands this and even sympathizes a bit with them. But at the end of the day, my biggest leaps in financial understanding have come from listening to wiser and almost always older men. Because of podcasts like, and there are some wiser and older women too. Jill Schlesinger.
Sure. Absolutely. Does a great job.
What's her name?
Susie Orman?
Not Susie. Jean Chatzky. Not Susie. Anyway. But men and women.
Does terrific work. Yeah.
Because of podcasts like Talking Real Money, I feel like I can hold my own in conversation about money management. I feel confident in my DIY investment plans and feel confident in helping friends and family learn important concepts to consider when they try to come up with a plan for their long-term savings goals. Your services are invaluable for the young person if they can just get in the right mindset to receive the overall message you are preaching. Young people have the greatest asset of all. This is a wise young person.
It's called?
Time.
Yeah. Mm-hmm.
Time.
I agree. Mm-hmm.
If your show could reach more young people, I believe our country would be infinitely better in the long run. We should, I'm all for this. Let's do this. Okay. We should make Talking Real Money a mandatory class in all high school curriculums.
Godspeed, Don McDonald.
Thanks for all you do. Oh, you got a John Glenn comment in.
No, I was... Do you want me to tell the story now or not? No, I'm not going to tell the story because I can see your...
You can tell the story in a minute. You truly do provide a great public service, John Glenn. And that's from John Glenn, Jr., the third. No, I'm kidding.
Arlington, Virginia.
Now, since this is a show listened to primarily by old people.
Yes, who will probably know.
Tom has a quiz for you. Tom has a quiz for you. Ask them the quiz. Do it in the form like you did it at the advisor meeting the other day.
Do it in the full employee meeting.
Of Appella?
Of Vestry by Appella. Plus
Vestry by Appella. Okay.
And there were 2 people in the meeting of 17 that knew the correct answer. And the question was, I read a quote, And I said, that was from John Glenn. I looked out at everybody and they were looking back at me like I was talking in a different language. And I said, and John Glenn was? And there was not one response. Now, Barb Devereaux, obviously.
Well, she's our age.
Generation. She knew. And then one other person said, well, he was on the moon, right? No, Mr. Glenn did never ventured to the moon, but he was the first American to orbit the Earth on Friendship 7. But not one person, and most of them are younger, I get it, knew who John Glenn was, which I think is kind of a shame because he's a national hero to me, but okay, fine.
How many times did John Glenn go to space?
I think it was just twice, right? He did that one, and then he did the one when he was 77, I think.
In the shuttle.
Yeah, right.
Yeah.
So, and now he's resting comfortably at Arlington, and the Friendship 7 is there at the Smithsonian in Washington, so where it should be. All right, end of story. Was that painful? Was that difficult to listen to? Was that like fingernails down the chalkboard?
No, you're right. It wasn't as bad as all the World War II conversations.
We can do that next.
No, let's not. I think we're done. Do you have a question? Please call us at 855-935-TALK, 24 hours a day, 7 days a week. We'd love to help. Or send your question in at talkingrealmoney.com. And if you have a big one, I just need to sit down with somebody for a little bit. I want to do it myself, but I'm a little confused by all the garbage that I've been collecting over the years. We call it hodgepodgery. Set up an appointment with, excuse me, I'm going to cough now.
No, this is a podcast.
Pardon me.
You can't cough on
I
a podcast.
know. I don't have a video cough switch.
I remember how well you used to use the old one when you were on Business Radio Network when you hit the
Oh, I'm a pro with a cough switch if I have one.
Yeah.
I don't have one. There's no such thing for video.
I've got one. It's like this.
I can still hear you.
Okay.
Allergies. Where was I? Oh, go to Vestory.com.
Hodgery.
Go to Vestory.com. Set up an appointment with one of our advisors. It's free. It's easy. There's no obligation, and nobody's going to hit you with a high pressure sales pressure.
We're going to come after you, and we want your money right now, Don.
Come on, boys and girls. Let's get invested. We're not going to do that.
Lovely annuity for you. Okay,
Yeah.
sorry.
We don't sell annuities.
Oh, that's right. That's a
those
different
other
show.
idiots. So anyway, there you got it. Thanks for being around. Thanks for listening. Thanks for joining us.
Sign up for our LinkedIn. Sign up for our YouTube channel too. Should have mentioned that.
You mean subscribe to it?
Yeah, that's the word. Are we over 500 yet?
No.
We got to come on.
No, not last time I checked. Anyway, you got to do. We should do more of what the other YouTubers go. They go ring the bell, subscribe. I don't even know what ring the bell means. Ring the bell, subscribe, leave a comment in the notes at the bottom of the screen.
Okay. Do all those things, but please subscribe. We need at least 500 for a little respect, self-respect, if nothing else.
I don't think you actually get YouTube respect until you're at like 50,000.
We have almost 1.3 million people that have downloaded our podcast, however. So we got that going for us.
We do have respect in podcast land.
Yeah, okay.
We're done. Thanks for being there. Yeah, tell a friend or two or 10 or 1,000. And go to our YouTube channel. And if you like what you hear on our podcast, leave a review at Apple Podcasts and join us pretty much every day. We don't do much on the weekends, but we try to be here about every day for you. Thanks for being there. Take good care of yourselves. I am Don. That is Tom, hanging out, talking real money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?